Hey, welcome everyone to the Kindle Report. This is a pre-recorded message that I'm doing tonight. I'm not going to be able to be live. I will be tomorrow night. I'll be live doing the usual time. This will also be premiered at 9:30. You'll know that because that's when it comes on. But the normal schedule will fall in place this week. We'll have the live room on Monday. I've got the link to the indicators up on the screen here. If you haven't looked at the indicators, you'll see them in the presentation here in a few minutes. But we're definitely going to continue to move these forward because the option to have these is phenomenal. You wouldn't believe the stuff that people are already doing with these. So if you haven't signed up, it's a one-time payment. Do that. You get a free month to our live trading room, and that's pretty exciting as well to be involved in that. We're setting up trades, we're doing education on the indicators, the whole bit. Anyway, let's get into tonight's video. So welcome again to the Kindle Report. Make sure you subscribe and like these videos. Hit that notification bell so you'll know when I do come live, because I do live shows every day for the most part, with the exception of today. But there's a ton to look at this week. We have the FOMC meeting coming in. This is going to be, I think, a big meeting. Last meeting was big, but what are they going to say? What do they have for us? Are they going to raise 50 basis points? They're going to be more of an aggressive stance. What does that mean to the markets? There's just a lot to unpack. I'll be covering this week as we go through the videos. The other thing that's coming out is unemployment this week. So we've got unemployment. There are approximately 1,500 earnings reports coming out. There's some huge stuff going on. So just be aware that this is probably going to be an incredibly volatile week. And I think what we saw, looking back on last week, what we saw is just this gyrating, flipping. We were up 2%, down 3.5%, and just back and forth. The end of the week, we ended up down 3.3% on the S&P, Nasdaq down 3.9, Russell down 3.9. Most of that was on Friday, right? So we're looking at the year-to-date numbers. S&P down 13.3, Nasdaq down 21.2, and the Russell down 17.2. So the folks that are talking about 20% we're in a correction phase. Well, we're definitely in that. But there's a lot more that's likely to happen as we go forward on these markets. I'm just not seeing any signs that things are going. I'll go through the database in a minute. No signs there. Nothing good is going on in the market. I've even seen a couple things I'm surprised. There's a couple perma bears out there, and I've seen probably 3 of them actually talking about, well, we're due for a bounce. All of a sudden they're getting bullish here. They're looking at metrics, which is really typical of most of the folks out there, looking at sentiment and going, this is the worst it's been. And listen, that doesn't matter. None of that stuff matters. You have to have a reason to be able to buy these stocks fundamentally. There's a whole implosion still happening on these so-called growth stocks. Those things are just continuing to go down. We've seen what I think ARC is a good example of those type of stocks. And I think it was down 23% just in 1 month, in the month of April so far. So I don't know how it ends up. It ended up down that way. So I don't know how this month comes unfold. But we're looking at the old sell in May and go away type syndrome. And there's a lot of signs that things aren't necessarily going to get much better. Could we bounce? Absolutely. There's a couple of things that I'll talk about here in a few minutes from the standpoint of, at least from a technical standpoint. And I went through this stuff on Friday's video talking about the 21-month moving average support. There's some really substantial support coming on right now, but we're also seeing new Fibonacci patterns to the downside. There's a lot to unpack here. So let's talk about the economics that are coming out this week. We're looking right now on Monday, ISM manufacturing expected to be at 57.5, still in expansion mode. Construction spending up at 0.8. Tuesday, we have factory orders, not a big report, but it's expected to be up 1.2. The FOMC meeting starts on Tuesday. They start chattering behind them. Also get the jolts or the job openings. last time 11.26 million jobs. I think the labor market's just going to continue to stay really tight. So it's interesting to watch this because the labor statistics, and I've talked about this in the past, continue to be really tight, really good. But then when you start to look at some of the things that are going on out there, for instance, the first quarter GDP was negative 1.4. It was expected to be up 1.4. Nobody was even talking about that. It was kind of in the background, right? It was really focused on earnings. We saw Facebook earnings kick up one day, and that was everything was fixed. And then the next day, Apple comes out, but then they give really bad forward guidance, all of that kind of stuff. And then Amazon puts the icing on the cake, and that was about all it took there. And I just want to make a quick comment about Amazon. Amazon is under its 200-week moving average for the first time since, I believe, 2011. It's been a decade since we've been under the 200-week. There's definitely a major shift going on with the FANGs and the flows. So whether or not ultimately the small caps come in and save the day, we'll still have a lot to do before we get into that. And I'll be covering this as we go through the week on all of that. So let's see here. Wednesday ADP, 400K expected new jobs. ISM non-manufacturing to be at 58.0. We've got on Thursday claims 182, continuing claims at 1.4. That's continued to contract. And I talked about this before, is that really what's happening on the claims is that we're seeing on the continuing claims, these are historic numbers, but if you compare them to the amount of population there is today versus the numbers that you're going back 4 decades to, this is a way even better number than we've ever seen. So the labor market's probably never been tighter in the history. So do we need workers? Absolutely. We don't. We need skilled workers, not unskilled workers. So let's. On Friday, we got unemployment expected to come in at 3.6. Jobs are expected 400K, just like ADP. And then we have consumer credit also coming out on Friday, and that's expected to be around 25 plus billion. It's not a big number, everybody watches, but the sentiment numbers, a lot of these things are just continuing to send out these really mixed pictures. And you folks remember on this channel, I was talking about the economy hitting the wall, and that's certainly happening. In fact, they're going to blame everything on Omicron for the first quarter and all that. It had nothing to do with Omicron. It had everything to do with both the labor shortage and some contraction, and these prices are starting to affect virtually everybody. And we're also seeing the housing market start to see some ugly numbers, and that's not good either. That was one of the big elements in 2020 and into 2021 that was driving the economy forward. And now we're just seeing everything just halting, screeching halt. We saw some -8 numbers in the housing metric. So this is not going to get any better anytime soon. So as we look at the rest of the stuff that's happening, we got big time earnings coming out. Like I said, we got over 1,500. So Monday's 125. You got focus on energy. Tuesday, I'm just kind of rounded these off. There's other stuff in there, but 306 on Tuesday. These are chips and banks, and Pfizer comes out. So some of the pharmaceuticals are coming into play this week as well. Wednesday, 419, energy and health again. And then on Thursday, 542, oil and resources are look to be the biggest focus of things going on. And then Friday, we have only about 60, but it's going to mostly financials are coming out, and not necessarily big, more of the mid cap and some of the secondary financial group that's out there. So, but these are all really big numbers. So we have to deal with the Fed, the FOMC, all of the rate hikes, What are they going to say about tapering? This is a huge week coming, folks. I'm actually looking forward to it. So let's go ahead and take a look at the database and get through the rest of the presentation. Shouldn't take me too long to get through there, but there's a lot to cover. So as we look at the database, this is the daily. We'll start here and go backwards. The dailies had about 160 buys, had 740 sells. We're at 14.80. You can see on the weekly, I'll just cover that, we only had roughly about 97 buy signals, but we had 700 and about 20. These are rounded numbers here. And we had negative ratio across the board in the database. So it was pretty ugly. And as I mentioned, we had big ugly weeks, but most of it was on Friday. And I'll just kind of summarize the database as we're not getting any traction. Why would we? Market was down 3+% across the board on Friday and for the week, as I mentioned. So there's not any positive. We're not seeing bottoming in any of these stocks. And if we do, we saw that big bounce the other day. Everybody's like, oh, that was a reversal. That was it. No, it wasn't. And I know I was criticized for not buying into that. I thought maybe we'd get a follow through to the upside, but we got right up to 10 period moving averages. You'll see got rejected from there and just went straight down. Now, like I said, there's some pretty significant supports. Let's get into the S&P. So as we look at the S&P, we did get an STX buy signal, so that means we could go sideways, and typically that tells us that we're going to go into maybe an R1, R2. That's 41.56, 41.89, S1 40.98. That's getting very close. 40.93 was the low that we saw way back over here. On this low over here was 40.93 on the 24th of February. So we're looking like we're going to retest that low. And there's something interesting that happens. I will go over. So look for probably an S1, R1, maybe. Let me get it on the right numbers here. I have to go over to where there's no trading. I'm used to the market being live, but this is where the numbers come in. S1 would be retest of the lows, S2, 40.65 be a new low, and then it will be all about the close. But look at the PPMs here. They're all accelerating down. I want to go over to the weekly chart here, and what we're going to see on the weekly is we've got some new downward projections here. 39.24, 36.54, 34.87 new fib projections, suggesting that we were going down toward the 200-week moving average on the S&P. There's still reasonable values on the PPMs, which tell us we might support. I'll show you the monthly here in a minute, but from the standpoint of the current weekly, we're minus 0.47, minus 0.42. So everything in this downward pressure, now these PPM stand for price, pressure, momentum, and all of the momentum is down. And most likely when you get up, if we look at a weekly basis coming into this week, 41.71 is R1, R2 is 40.33. So probably an R1, S2 this week. I can't imagine people are going to get bullish. We'll see what the Fed does. There's a lot to digest, so we could have a pretty wild week where we saw an S2, maybe R2, that's 42.22 to 40.33. So just expect plenty of volatility as we come in here. Now, this is the number I want to talk to you about that is important. We go over to the monthly chart here, and the one thing that is happening, the monthly momentum is starting to roll over a bit, and we're somewhat vulnerable here. At 40.80 is that value. Now this will update when the market opens later today. I won't have the advantage of having that, but it's about 50 handles. So it's going to put us up around the 41.20, 41.30, right where we closed on Friday. So that's going to be the support. What's going to be interesting is to see how these PPMs, if they lose a lot more momentum and become more vulnerable. And, this is the new calcs for the monthly, and R1 is 44.61. That's, let me get to the right place. R1 is 42.42, S1 40.12, S2 38.84. All of a sudden, we're trading down easily. The grid has turned down substantially this month. The high end of the grid is long ways away from the all-time high, and R1 is 42.42. That's certainly a possibility. 43.70 is somewhat hard to believe that we could get there, but expect to see at least an S1 40.12, R1 S1, and I'll update that. We've got a whole month to go through this to come and determine how the positioning of this range is going to be. I'll start with the monthly I'm going to go top down on the Nasdaq. Nasdaq has something I talked about last week, is penetrated well below its 21 period moving average. That's 13,848. We closed 12,890. And the next level from the standpoint of a moving average right now is at the 11,193. That'll come up a little bit. Probably the best estimate is going to be S2 11,692, at R1 13,399. That's probably your range. R1 S1, just like with the S&P. This is for the month of May now, so we're definitely look like we're going to have a downward bias. You look at the PPMs here, we're down minus 1.11. We're still positive on PPM 2 at 0.69, PPM 3 1.47. So when we look at those numbers, that tells us we could see some movement back up toward the 21 period moving average, 13,848. That's pretty much what I was just talking about. That's an R1 move. So that's certainly a possibility. But like I said, look for a lot of volatility. Let's go down all the way from the monthly down to the daily here. And the daily is just continuing to see this acceleration downside. PPM 1, 0.77, PPM 2, 0.75, PPM 3, 0.20. So we're continuing to see this. As far as the STX buy goes, we did get that as well. STX on the daily was 12,898. We closed 12,852. So we could see R1 12,969, R2 13,100, but I don't necessarily expect huge volatility on Monday, but we could see an S2 R2 because volatility levels are kicked up really big. Next market we'll look at is the Russell. The Russell continues to move lower. We've got some fib projections here. 1898, we printed down to 1864. So we went through target 1. Target 2 is roughly where, just below where we are, 1836, and 1798, we'll call it 1800 from a fib number. But if we look at these PPMs, minus 0.72, 0.54 minus on PPM 2, and PPM 3 minus 0.20. These are big, big numbers. Markets don't turn around necessarily from this level. They can stabilize down at these lower levels, maybe printing into these fib targets, maybe down around 1830, 1800. That would be a reasonable place to expect maybe some stability. but for now, lots of downside. And I'm just going to flip from here all the way over to the monthly just to get that viewpoint. And you see this looks just like the Nasdaq. We've got this 10-period moving average rolling over here. Next month, not this month. So in June, we'll see a crossover, and that of the 10 and 21, and that typically will set up a little minor bottom at that stage. But we're looking at these PPMs down, PPM1 down 2.04. So there's definitely going to be a ceiling up at that 10-month moving average. This is going to be the story of the week. I've got the monthly up here right now. I remember just last couple months ago, we got these objectives on the upside for 2.8, 2.87, and 3.16. I thought, well, that's pretty ridiculous. I don't think we're going to get that high. I didn't think we'd get above the 200-month moving average. This is a monthly 10-year. And that was at 2.66. Well, we did all of that. And in fact, we closed at 2.887. And the RTX number 2.882. So we got a monthly RXT sell. So I would expect some stability. We could continue to print up depending on what comes out with the Fed. We could see a spike up into this fib number on the upside, 3.16. That number also exists on a target on the daily, which we'll go to next here. But you can see these targets up at top here. You see high target 1, 3.13, which is similar to the 1.6 off the monthly. The high target 3.44, 3.63. I think those are not very realistic, but things are starting to get out of control. And I think there's some vulnerability to a spike, and maybe it'll end up being like we did in crude oil, where we spiked up, to 130.50 and then just plummeted 30% from there. So there may be some climactic move, and maybe the bond market will bottom. But I think at least from a monthly standpoint, we should start to stabilize here. I don't see a lot of downside at the moment. The 21-period moving average 2.72. That's about it on the downside. Maybe 2.65 would be the extreme here. So expect to see that type of environment. Let's take a quick look at the yield curve here before moving on. And this is something I've been talking about. Yield curve's at 0.3, so we're getting close to inverting again. And as I mentioned, if we see a surge in yields and the 530s, which is the far right-hand chart here, actually gets into goes back and inverts, it's going to have to stay inverted for a while. So we're going to find out a lot, I think, this week. It's going to be interesting to see how Jay Powell handles himself this week and how he's going to try to twist, and how much of the BS that all of us are going to be able to look through and realize that these jokers have no idea, A, what they're doing, and B, how to deal with what's going on in the economy, inflation, and the whole bit. Because one of the things that I haven't talked about for a while, or I have been starting to address it, but I think there's new supply chain issues coming. There's a whole nother wave of disruptions coming our way, and we're going to see all this stuff very soon. So I'm going to cover energy next, but the reality is that we're going to see a lot of stuff. In fact, next I'm going to bring up the yen, because this has a lot to do with what's going on with treasury. So let's go ahead, and while I'm doing that, let's just go over and take a look at the yen here, because this is the chart I have up here right now. This has got the trading view indicators, the PPM 1, 2, and 3, price objectives, all of that stuff is on the screen here. And we're seeing just a plummet here. This is a monthly chart of the dollar, of the yen versus the dollar. We're seeing just a little bit of stability, but on the weekly, we could see some stabilization here, and I hope so. The Japanese have come in to support the yen, which I think is a serious tell from the standpoint of what's going on with their economy. They're basically on the edge of panicking. They do not want to raise rates. They're actually doing a yield curve strategy, and they want to keep rates down below 0.25 to 0, and they're just going to fight that battle to the end. And it's almost as if they're trying to help the Fed, because they are a big purchaser of treasuries. They own more treasuries than anyone else from a sovereign, outside sovereign, and they own 1.3, China 1.1. And if you look, I could go through a whole explanation of why they continue to buy treasuries, but why would you want this 250% GDP JGBs, the Japanese bonds, versus the U.S. treasuries? They're much safer bet, and they yield better. Everything is way better. So they're going to continue to play the yield curve. They're going to do some things. So if we see any further downside, though, and they go to the Forex markets and start to try to stabilize the yen, that's going to be a panic sign, and it could be very disruptive. And I've talked about this before. I'm going to continue to stay on this theme from time to time. All right, let's go over to crude oil. I've been going on and on about crude staying in this range, which is 96 to 106. We finished at 104, and we got some new objectives that just came in here. Let me bring those on the screen so you can see them. The new objective here, fib upward targets 112.12, 118.55, 122.53. So there's some new upward objectives coming. We're not really seeing any acceleration here. This is the daily chart. So we're going to need to get probably over 106 to really get this trigger to happen. So watch for that as we go forward. Let's take a look at the weekly. And the weekly chart just come back above the 10-period moving average. I've been talking about the rising 10 inside of the market grid pattern, and that's a very bullish pattern. And typically the markets will trail right along that 10, a little bit above, a little bit below, and it looks like we still have enough momentum. In fact, momentum ticked up a little bit last week. We'll see when we get an update. I typically have a little different view I can give to you, but this is the best we're going to get today. So just going to continue to go through the video as we have. So so that number right now on that 10 is 103.63. So I expect to stay above that. Just talk to you about some of the short-term objectives there. So here's the daily gold, weekly gold chart, and as I've talked about, I really am not liking how this chart is looking. We got PPM1 is really rolled over, first, second derivative. PPM2 is trying to do the same. The support that is at the PPM2 1880 is waning a bit. We didn't have a nice close on Friday, so we did see some weakness. In spite, even the Dow was off a little bit on Friday, but there was no real reason to be buying gold. But if we look at last week's range, we're looking at 1870 to 1935, and then we settle back under 1900 again. Would have liked to seen it stay, a little higher, maybe above 1920 or so. That wasn't in the cards. Take a quick look at the daily. The daily, while we had a bad weekly close here, we're still looking at these patterns here from the standpoint of the PPMs are stabilizing, so that's encouraging. We'll have to see if we can actually get any more stabilization. We're going to have to get back above the, I would say, we're going to have to get well above the 34 level, 1934 level, to actually get this to come alive here. Final market I'll cover is Bitcoin. It's a Sunday afternoon, and we're seeing some downward pressure here. Maybe that is an indication that maybe we're going to see some lower futures opens when the futures open in a couple hours. So like I said, this is pre-recorded, and this is not a live show. It is a pre-recorded show because I'm not going to be there tonight, so I will be back live tomorrow night. But the PPMs are mixed here. We got a minus point. This is a daily Bitcoin, a minus on the PPM1, which is 39,527 is the ceiling here. There's actually very little support down below, and there's some vulnerability if we break down here to move toward the 33,000 level. So it could get pretty ugly, especially since, as I've talked about quite a bit, that this is a risk on, risk off asset. It's not an alternative. And we look at the weekly numbers here, and weekly S2 is 37,110. So we're getting close to that. S3, 35,900. And STX is 34,966. So this will update at midnight Eastern time tonight. But there's really no reason to probably be owning this, maybe trading in this range. We're continuing to be somewhat sideways, but momentum is starting to turn back south again, and that probably has a lot to do with what's going in with the equities, and there's going to be a lot of uncertainty with the Fed and everything coming in. So folks, this is the end of the video. Thank you so much. Sorry I wasn't able to be live tonight and give you some updated information from the standpoint of where the markets were trading, which I usually do every evening. I'll be back tomorrow night at Monday. If you haven't signed up for the indicators, you can go here. This link right here will get you to the indicators and get you into our live room for a month for free, no extra charge. You buy them. It's actually the same cost. 1 month of the live room will get you the indicators, or buy the indicators, you get a free live room. Anyway, these indicators are really incredible. They help you. I teach you how to do it in the room, how to use them, and how to trade with them. So anyway, I hope to see you there, and I will see you all live on Monday night. Thanks for watching.